For the second week in a row, we've seen the stock market rally be cut short at a key resistance level, leaving us with a very similar setup that we seen right before the October market sell-off.
Although the market rally was cut short last week, the U.S. indices were still positive, with the Dow Jones leading the way, up almost 3%, and the Russell 2000 just over flat, up 0.1%. The NASDAQ still leading the way for the year, up over 7%. Foreign and emerging market stocks, foreign was positive, but emerging market stocks down 2% again this week, and now emerging market stocks are down over 13% for the year. The chart that we're looking at today is of the S&P 500, and I specifically want to focus on the blue box right in the middle of the chart. Now, the top line of this blue box represents a resistance level, and the bottom line of the blue box is a support level going the whole way back to June of this year. Now, as you can see, beginning of August, the S&P 500 broke out above the top resistance level, and that led to the all-time highs that were put in this year. Also, in October, you can see the breakdown below the support level of the blue box, and that led to the sell-off in October. Next, I want to focus on the two circles to the right side of the chart. The right circle is where we currently are today, and you can tell that this chart pattern looks almost identical to what happened in the middle of October. If we see this chart pattern play out the same way as it did in October, we could see the S&P 500 drop down to the lows that we saw in the middle and the end of October throughout the rest of this year.
Last week, midterm elections were held, and in the Senate, the Republicans kept control of 51 seats, and still 3 seats remain undecided. But the big story was from the House of Representatives, where the Democrats have taken control. What this means is that we will see a political stalemate for the foreseeable future. Also last week on Thursday, the Federal Reserve came out with their meeting notes, and they stated that they're going to be keeping their plan intact, meaning that they're looking for 4 interest rate hikes next year and also 1 later this year in December. And lastly, oil has continued its sell-off, and now we've entered bear market territory, meaning that we've sold off by over 10% from its highs, with the S&P 500 setting up almost identical as to what it did in October, right before the sell-off. Along with the midterm election results, our hopes for a Santa rally are diminishing.
Also, we'd like to say thank you to our current and former military for their service on this Veterans Day.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our video and share our Facebook page. Thank you.